angel investing as an alternate asset class, educate investors on best practice for investing in local early stage ventures, and generating a deal flow, a quality deal flow for early stage investors. So it's clearly around matching early stage startups with investor capital. On a more personal note, I'm a CPA by profession, and I've been involved in startups and SMEs for more than 20 years now. Through my investment and advisory firm, Venture Pathway, we've been focusing on the capital supply chain, and I've been speaking to Derek and to Erez at various times around how that actually looks, the capital supply chain locally and internationally. And we were looking specifically at what works and what doesn't work. So last year we did some research on funding cycles around Australia and the US, and we found that only 2.16% of ventures looking for funding actually receive it. And the significant factor around that was ventures are not looking at stage appropriate funding sources. And funding is nuanced and it's not a one size fits all. So that's why we created Venture Pathway, to assist businesses become completely ready to invite, receive and deploy funds in a transparent and structured way.
Thank you. Thanks, Raj. Max, if you want to go next for me, please.
Yeah, sure thing. Yeah, so I work for Partners for Growth, PFG. So we're founded in 2004. We've got a headquarters in San Francisco, and we've got a Sydney office down here where we look after the APAC region, and that's where I work. We're a $750 million USD fund, and providing capital to high growth companies in the form of a loan rather than equity. And kind of like a bank, but unlike a bank, the companies we fund don't have hard assets, generally tech companies. Instead of looking at intangibles such as IP and contracts, etc. The rationale for raising our form of capital, rather than straight equity, would be to extend your runway, to hit you might want to hit milestone before you raise your next round, or you're investing in your CAC, or you might not just be you might not be fit into the VC bucket. You might not be 10x, but you might we're looking to make kind of 1-2x our money. So for that kind of company, it makes more sense. And so, my background is, I've been working with Partners for Growth for about 3 years. And before that, I was at KPMG in the corporate finance team, and also worked on a few startups myself.
Right. Thanks, Max. And lucky last, Erez. Thanks, mate.
It was good you got me at when you did. I don't know if you know, these ice cream trucks was driving past, and it was just ringing. Anyway, well, thank you everyone for having me. My name's Erez. I'm head of fundraising at Equitize. Not sure what titles really mean, but my role is more around managing due diligence of the offers we put up on our platform, and working with all these founders and connecting them with investors and executing on these on the capital raises. So Equitize is a digital investment platform, the largest across Australia and New Zealand. If you imagine, what we do is we create little websites for businesses that people can invest in those businesses through those deal rooms or websites. And the core technology we operate is that it automates almost the entire process. So Equitize typically deals with 4 pillars of funding. One of them is retail equity crowdfunding, which is like crowdfunding, but for equity. We have about, whatever it is, 50,000 retail investors across Australia and New Zealand. We also do sophisticated raises only, and we have a large and growing base of investors like that. Then we have fund partners or wholesale partners, and we also facilitate IPOs also through that core technology. Equitize is about 4.5 years old. We're a growth company of ourselves. We have deployed about 48 million in 4.5 years. I've been involved for about 2.5 of that time, and in 2.5 years we've raised 38 of that 48 million. So the way we look at things is more from it's not really that important to me how much we raise. It's more what happens to those businesses afterwards, and the appreciation of value. We take that very seriously. And we've done very well with a lot of up rounds and other types of statistics around metrics for our portfolio companies. And I suppose I'll get more into what COVID means for us a little bit later on and perspectives there.
Thanks, Erez. So we'd love to find out who else is in the room other than our panelists today. So in the chat, I've just posted a very quick survey. What I'd like you to do is to go to that link. There's about 5 or so questions, really, really simple, to get a sense of who we have in the room and how we're feeling. So I'll just get you to complete that. I'm going to give you, it's going to take about 60 seconds or so. 8 responses, 9. Couple more still trickling in. Final 10 seconds. That's okay, Aaron, Steve, and Karen. I can. We've got enough responses there. We will be able to share your experiences in the breakout rooms in just a moment. Cool. Can everyone see my screen?
Yep. Yeah.
So we've got quite a few people feeling a little bit crazy. Some feeling happy and content. No one's F this, which is interesting. Excited and energized, a couple of mind blown, and only one, oh my God. So there's one person out there we might need to give a bit of a hug to. We've got majority running their own business, startup founder, work in a corporate environment, one governmental, other, and 4 investors, which might be our panelists, and a whole bunch of different industries here. So from everything from technical, travel, yoga, insurance. And as we would expect, most of our pressing causes are funding related. So revenue, halted deal flow, interesting one, co-workers working from home is a challenging one, supply chain, etc. So let's make sure we delve into some of those issues as we go through today. And lastly, one I always like to look at is how optimistic are we feeling? And this is what we've been seeing in lots of our events like these, is that most people, the majority of us, are feeling optimistic. As much as we know there's challenges, many of us are also seeing the opportunities for innovation, for change, to adapt our business models that are coming out as a result of these. So really great to see that as well. So what I'm going to do just very briefly, before we get into our panelist questions, I want to have an opportunity for you to meet one another. So what I'm going to be doing is putting you into breakout rooms. They're going to be quite small breakout rooms of only 3 to 4 participants each. So you each get a chance to introduce yourself. So we're going to do this for about 5 minutes. You're going to have to be quite speedy. I'm going to bring you back at about 22 past 12, but you'll get a notification that will come up when you need to come back. So what I'd like you to do when you go into these breakout rooms is just take about 30 seconds or so just to introduce yourself, your business, and your role. There is Mud. All right, you should be seeing your invitations coming up now. Marlon and Susan, we're just in breakout rooms at the moment, which is why there's only me in here at the moment.
No worries, mate. For
I'm
some
just bringing them all.
reason I got kicked out of them.
Oh, did you? Okay, I'm just bringing them all back in now anyway.
No worries.
Welcome back, everyone. Now, I'm guessing that was much too short to meaningfully introduce yourselves, but hopefully you got to meet at least one or two other people. Right, so it looks like we have everyone back. So as I just said, unfortunately, I know that it was probably very brief in order to do a meaningful connection, but hopefully you've managed to at least slightly introduce yourself and share your role in your organisation. So we're going to move into our panel component now. So the way this is going to work, I'm going to ask about 4 or 5 questions to the panelists. Each of the panelists will have an opportunity to respond if they have something to add to that question, and then we'll have an opportunity to open up to the chat. So as you go through, as you're listening to the panelists respond, if you do have a question, feel free to chuck it in the chat straight away. Panelists, you don't feel like you have to respond straight away. I'll curate those and replay them back to the group. So if you do have a question, just feel free to chuck it in the chat at any time. And after we go through a few of our structured questions, we'll go into the audience questions. So moving into the first part, I think a lot of what will come out of this period that we're in at the moment is stories on how businesses have adapted or how they've been impacted. We already see that in the furor with the media. You see a lot of stories around how individuals or businesses are adapting or changing during this time. So, Derek, perhaps starting with you, mate, what have you currently seen? How are you seeing COVID impact businesses, and how are you seeing some of the companies in your portfolio respond to date?
Yeah, sure. Well, it's why I clicked the "I'm going crazy" button on the "How am I feeling right now?" because it's both ends of the spectrum, to be honest. So, you know, at one end, there's a company I work with, and they literally, you know, probably going back 3 weeks ago, forward booking revenue dropped by 50% through cancellations in a week. And so you've got that company, which is like, okay, we've got to get really tight on our cash flow reporting ourselves. The result of that was that they did have to stand some people down, and you know, you're trying to navigate the you know, grants and incentives that are around. So that's sort of one end where you're kind of hustling and rallying like that. And then at the other end, one of the companies I work with, which is in digital health, we fortuitously launched, so we're a services business, but we're building products, and we launched our first product last year, which is a tool that helps. It's in the sort of medical research area, but it's a tool that actually helps the researchers engage better with their patients. A lot of the technology at the moment is more about the aggregation of that data, not around that customer or sort of researcher-patient relationship. And so we'd launched that, and that was actually going pretty well. But then it turns out we got approached by one of the hospitals where they wanted to use our product to track COVID cases. And suddenly it turns out that that can be repurposed. And now we've got other hospitals asking the same thing. And so that company's the other end, where we're actually going gangbusters and we can't keep up with the work, and we're having to recruit around that. And actually, we've been waiting to think about when's the right time to open up or to move into some international clients. We've got our businesses in India and the US and Australia, so already set up around the world, but most of our client base is in Australia. And so suddenly we've accelerated our growth opportunity because of COVID. So, and you know, and then everything else in between. But that's sort of pretty interesting where we've got those extremes occurring across the portfolio.
Are you seeing particular industries or sectors funding better or worse? Obviously, health is a natural one that's going to be have a natural alignment with what's going on at the moment.
Yeah, I mean, in terms of the stuff I'm involved in, we've got some that are, you know, so one in security, one in health, those are going pretty well. At the other end, actually, the one that I was talking about is kind of really in digital marketing. So it's almost like they were a second tier knock-on of revenue being cut, because it wasn't until their clients realised that, hey, we need to make changes, and then you get the flow-on effect of that. So I think when COVID was sort of started to come out and isolation happened, it was they were pretty optimistic at that point. We hadn't seen a downturn. There was almost like a slight delayed effect, which I think is still going to be the case with some sort of second and third tier companies in where they fit in the supply chain. We did have a couple that were directly impacted where they're involved in events and space hire and things like that. And, you know, literally overnight, that whole industry got shut down. So those guys are very much in, okay, we need to, what is not hibernation in terms of not do anything, but we're probably not going to see the revenue we're expecting. So do we take this as an opportunity to, you know, build those product features that we didn't get to, or document, you know, customer service manuals that we didn't otherwise have, and things like that. And, you know, probably something I'll talk about later, the companies that I've found in that situation, you know, one of the, well, there's two things, I'll come back to this later, but one is cash and two is people. So, you know, there's a lot of planning around, my perspective is you just have to make sure you're there at the other side, because there will be recovery. And you know, got some things I can talk about that might help with that.
Great, thanks. Raj, what about yourself? Are you seeing any story out, or any patterns or themes come out that our founders on the call today might be able to learn from?
Yeah, look, I think all of us are probably seeing a similar pattern that Derek's just described. The thing for me that's most apparent is those businesses, and when I say businesses, they're not just startups, they're early stage ventures. Those that have clear strategies and inbound methodologies of doing things are actually faring much better, both psychologically and from an activity base. There are a number of people that have shut down and just sent people home without actually taking the time to think how they can utilize those people in their workplace to improve systems like Derek's talking to. Those businesses that are actually doing that are finding they're discovering a whole bunch of opportunities even within their own businesses that they hadn't really thought about before today. And it's really intriguing how, you know, everyone for the past 5 to 10 years has been really clear that electronic medium is the way to go. So in startup land, that's kind of commonplace, but in small business land, that's still not really that common a feature. And all of a sudden now, through Zoom and working online, people are going, well, okay, this is quite interesting. So again, similar to Derek, there's an events management group out of the US that their business closed down literally overnight. They've pivoted to providing online training for that process. So lots and lots of different emotions and processes going forward.
Max or Erez, have you seen any stories where people have really pivoted in an innovative way, where they've taken those maybe traditional business models, or a business model that has come to a halt, and they've done something that surprised you, or something that's completely out of the box? That might be a difficult one without some pre-thinking.
Yeah, I don't think any of them made drastic changes. I think we're definitely seeing companies who had a whole range of growth projects where they've had to act quickly to decide which ones they continue with or not. There are some companies for sure that have learnt into it better than others and try to pivot their model a little bit. But I think the benefit of the kind of companies that we do find, and most of them are in the tech scene, and they have had a natural hedge against what's going on. Although I do think we haven't seen kind of the second order kind of effect of what's going on here. And I think, you know, even companies with sticky revenue, with granular revenue, B2B kind of software plays, they will start seeing some top-down freezes from a lot of their customer base, where it's not around, you know, even if you think your software or your model makes a lot of sense for your customer, it probably does, but it might just take a lot longer to get that renewal signed. And I think people start to think more about, you know, kind of debtor risk rather than, you know, the counterparty risk more so later down the track.
Erez, do you recommend people stay the course, or do you think this is a time to pivot and try new things? Or should we stick with the business model we know and love and hopefully we can weather the storm?
Yeah, that's for certain. Well, specifically that question, I don't know, I'll give you a good example. You know, there's a business, they've grown really quickly, doubled and tripled revenue, break even, team work really hard. They go into schools and they deliver courses on entrepreneurship for schools. Strong recurring revenue, engaged base, overnight, no foreseeable revenue, right? As what Derek said, it will unlock again, and they've got revenue contracted 6 months from now, but today they're in a bit of trouble. What do? They cut half their staff straight away. These people had been working very hard for them, so they're managing cash burn. And then to answer your question specifically, is they identified an opportunity to take this course content and put it online. It's not a major pivot, but, you know, they want to go and, you know, provide access to these children online. My perspective, and I can give you lots of examples of that, physios going online, yoga schools going online. So it's not a core change of their business, but it's a bit of a every man and his dog are going online story. The way that I kind of say that is, obviously you have a limited bandwidth as any business owner, and you have your focus. Given all of this, there is opportunities in those spaces. But for example, when I was speaking to this education business, the moment they shift online, their competitive landscape changes, right? Because there's people who have not been doing any face-to-face schools and only been doing like online education. So yeah, there's examples of pivots. If you're moving into a competitive landscape, I think that should be thought of ahead of time so that you can be most effective, or else, you know, there could be other ways to focus energies that would be more productive. That's probably my answer.
I think that's probably quite important, Erez. Traditional businesses going online, it's not simply a case of take your content and whack it online. It's a whole different marketplace. It's a whole different buy cycle. It's a whole different customer relationship cycle that needs to be built and developed as you go along.
Mm-hmm. Mm-hmm.
Let's get a sense from the crowd what everyone's thinking. So in the bottom right hand corner, you should see your reactions button. If you think you will be pivoting during this time, do thumbs up. If you think you will be staying course on your current business model and product suite, do the clap emoji. Let's get a sense. Staying course mostly, staying course. Yeah, majority. Yeah, very interesting. Very
I think kind of like what Derek said too. Like if you can survive through this period, there'll be lots of opportunities to take market share later down the track. Not necessarily through, you know, a massive pivot to your business model, but just being able to get to the other side. And if you can pivot along the way, then that's a good thing too.
Yeah, great. Thanks, Max. So Raj, moving on to our next question, one around cash flow. So often startups hear from mentors and advisors that, rightly so, cash flow is king. So what do you recommend in this uncertain time? How should people be managing their cash flow, and what lessons can we borrow from previous economic times of economic uncertainty?
Yeah, look, the first place to start on cash flow is government stimulus packages. There's plenty of things out there that are appropriate. You need to be careful of the integrity measures around that and make sure you're appropriate in accessing those. But that's got to be the first cab off the rank. So if you're a PAYGW earner, you should be getting pretty close to $20,000. Sorry, PAYG company, you should be getting pretty close to $20,000 almost as a gift from the government in the next couple of weeks. The JobKeeper program, the $1,500, it's a little confusing in their deployment, but it's actually a really solid program, and people should access that. In terms of cash flow, you know, Angels have still got the pitch nights going. We've still got all of our other processes in play. So from our point of view, nothing has changed as far as that goes. But it's normal cash flow management. So any recurring expenditure that you've got, you might have some SaaS stuff that you're doing that you kind of got the $9.99 package because it seemed like a good idea at the time. Go back and review each of those things. $9 doesn't sound like a lot, but if you multiply that out, depending on what it is that you're doing, it can become quite a significant process. With that, though, I'd also caution people to just cut and burn their staff. Your staff are really important. They're the things that are going to keep you going forward. So I'll get to that if that comes up a little bit later on.
What do you think about that, Derek? I know you're a big believer in people, and that's one of your big funding decisions. How do you think people should be managing their staff costs, which is often the highest proportion of costs for an early stage business?
Yeah, look, I mean, a couple of things I'd say on that. I mean, the first part comes to the cash forecasting, and any business I get involved in, we make sure that there is forward cash flow planning, and that's not always the case. We often sit on P&Ls and balance sheets, which are historic numbers. You need to think about forward planning numbers. There's some pretty cool tools around that can help with that as well these days. But what I would be suggesting is that you need to map out what I would call scenario planning. So think about what your initial budget was in the base case, and then start thinking about what those revenue reductions could look like. And the point I'd make there is that as entrepreneurs and founders, by virtue of that skill set, we're typically optimistic, and we just look at things and go, this is just another problem to solve. But unfortunately, the result of that is that we can look at what's happening now and go, well, that's not going to affect me, or I'm going to wait until the data says it is affecting me. And sometimes by virtue of waiting that extra 2 weeks, 3 weeks, month, you haven't actually made decisions early enough to give yourself the runway that you need. And I guess the point I was making earlier on is that then the number one thing you need to do is acutely understand the cash runway that you've got. And the scenario planning helps with that. The other thing I do with that is what's called, I guess the cash buffer, which is going, if nothing else happened, if I got no more revenue and I had to commit to the fixed costs that I've got, how long have I got? Now, tech companies tend to be a little bit different, but the average small business cash buffer is only 27 days. So, if you haven't been making some of those decisions now, you're probably about to run out of time, and you're probably feeling that anyway. But I think it just shows the point of how far in advance you've got to be thinking. In your scenario planning, obviously, it's looking at, as Raj was saying, the incentives that are on offer and grants and things, and including that. But ultimately, there could be a cost-cutting exercise. I would try as best you can to think about people as the last resort there. And when you're dealing with people, a couple of things I'd say is that although there's a pressure situation, people are the most important thing in your business. No matter what company you're in, whether you think you're B2C, B2B, government, whatever, from my point of view, all business is people to people. And even if you're buying a product from someone that's a physical thing, someone's made that product and designed that product and going to use it. And so I just think we need to get back, and this is probably one of the nice things that might come out of COVID, is that we're a little bit more people-centric than we have been before. And so when you're dealing with people, I'd say be respectful, show care, show compassion. But I'd also say, as a leader in your business, be decisive and communicate well and often, because the reality is, whether you like it or not, people are worried about their job at the moment, and you're far better talking them through where you're at, and my view anyway, being upfront with that so people understand, as opposed to them just waiting to find out what's going on. And even if that has to change from week to week, I just think that upfront communication is really important. And yeah, I mean, obviously from a startup investing perspective, for me, if I had to pick one thing, it's about the people. So it's pretty interesting at the moment when you're considering investments to see how people are responding at this time. And there's actually, I guess, due diligence that's on to see how they're responding and how they're dealing with pressure.
Right. Thanks, Derek. Max, do you have any stories from your startups on how they're managing their cash flow, or potentially how they're managing that difficult conversation with their people around cash flow?
Yeah, I think like Derek said, it's been open and have a really high level of communication with your staff, and they know that you're going through difficult times too, so they'll be more understanding if you kind of talk to them earlier rather than later. I think like Derek said, I think the most important thing is really understand what your cash flow looks like in different scenarios and what levers you can pull depending on how those scenarios unfold. and that really depends on, you know, your fixed costs versus variable costs and your revenue model. But I don't think this is one where you kind of want to look at your probability of different scenarios, but you kind of want to plan for the worst and understand what that looks like. Because here the game is really to survive. And like I mentioned before, you've got opportunity for market share expansion later on. So if you can, you take action early rather than later, because the earlier you act, the savings kind of accumulate from that earlier on, rather than that means you don't have to cut as deep later on when you're kind of reactive, rather than kind of preemptive. And so I think from all our companies, the ones that have been able to act earlier rather than later are the ones that, and communicate openly with both all your stakeholders, your employees, your funders, everyone. If you're able to communicate where you're at, then I think, you know, people understand, you know, and you'll be able to get to the other side a lot easier.
Things I might help as well that I was going to mention, just to add to what Max was saying, is that as best you can when you're dealing with people cost, I think, particularly if your team's small, trying to tackle it as an all-in approach. And what I mean by that, you know, if you can avoid cutting staff, but kind of offer to your team, look, times are tough, we're in this together. Now, obviously you can't mandate this because of, you know, legislation, but you can kind of say, look, what if we all took a 20% pay cut? Maybe that either means you keep working full time if you're happy, or, you know what, let's all go down to 4 days a week during this time. And often that result can save having to let go of 1 or 2 or 3 people, depending on the size of your team. And if you were to do that, I'd you know, do that on a timed basis. So we're making this decision for the next 2 months. We're going to review it on July 1. We've got a company I work with that's done that, and it's a team of 17 people, and they all signed up to that. As it turned out, the founder himself, you know, did the same thing. So he took a 20% pay cut, as well as going down to 4 days a week, and then pro-rating that out, and so kind of leading the way. But you've now actually, it's interesting, you suddenly got buy-in from the team. We're in this together and we're motivated to get through. The other thing we did at the software company I had when we got stuck in a cash flow situation was do that. But for our absolute really, really key staff, we also came up, we fast-tracked an option package that we were looking at doing. So we used equity or options into equity at that point as a bit of a leverage point for retention to just kind of put our money where our mouth was in terms of how we value them and things. So just a couple of practical ideas was worth throwing out.
Right. Thanks. That's fantastic. Thanks, Gerrard. Moving on to our next question, Erez. So given you're from Equitize, all about crowdfunding or crowdsourcing funding options, what are you seeing happening in that space? And is that a good opportunity to fund ourselves through this time? Is there activity happening, and what are you seeing in the crowdfunding space, the crowdsourcing space?
So, look, yeah, so Equitize operates a diversified funding model, fortunately, so that we operate across Australia and New Zealand. So just to be very clear on what we do a number of things. One of those is crowdsourced funding, and that if we were only doing crowdsourced funding, I think that it's given the investors are typically kind of everyday people, customers of these businesses, or sophisticated investors, more so in our case. It, for certain businesses, doesn't make as much sense. From our perspective, when we're launching retail offers at the moment, we're being very specific, targeted, tactful in the offer, and making sure that the terms, so the valuation, is fair and attractive in these times. So I think it certainly is a viable funding option. I think that it depends on the business, but we're still pushing ahead with a strong pipeline of offers over the next couple of months across retail New Zealand, sophisticated New Zealand, retail Australia, prospectus offers, and sophisticated offers in Australia, just leveraging the same technology. But yeah, I think it will take an impact. Is it like, if you're going to launch, but it's the same as any other capital raise, really, in that if you're going to put it up on a platform, raise capital in general, it's just about where you focus your energies and what's the best path for that particular business. So luckily with Equitize, the retail offers that we normally put up are already cornerstoned or effectively closed. So we work with a lot of partners. We're looking at putting up this awesome little neobank type of business. They have closed their funding round. We're just topping it up. So I think that gives you some insight.
Yeah, thanks, Erez. That's great.
Max, what are you seeing from your perspective? What other opportunities for funding are there for startups? For either those that are looking to scale during this time, which there are certainly businesses that have opportunities to scale, or funding for survival as a bridge around. What are you guys seeing?
Yeah, I think a few things. I mean, first of all, the first thing is you want to try and get as much free money as you can. So try and get some government funding where you can. And then I think depending on the situation, what the use case is for the funding, if it's really, really urgent and desperate, I think the best source of capital is your existing, well, first of all, cost cuts, and then otherwise kind of existing kind of capital, capital base. And then I think you want to consider all your options and really weigh up the risk reward on all of them, because what you think was available 6 months ago is probably might not be available today. We're definitely seeing liquidity drying up in the market a little bit, depending on how those the funds are kind of funded, whether it's retail investors or high net worth, etc. It might be a little bit more difficult at the moment. So I'd be mindful of where the actual money's coming from, and then I'd be looking at all your options, and then just like I mentioned, you want to weigh up all your what's the cost of the funding? It's probably gone up a little bit, and then what's the risk of it? So I think for us, we're still open for business, and I know most of the VCs in Australia are, but we're definitely seeing some pullback, and things are taking a lot longer to close. So if you think things are going to close right away, it probably won't. For us, we always have in-person meetings, for example, and at the moment in this current environment, we can't do that. So we've got to look at ways around that, and so things are just taking a little bit longer than they otherwise would.
Right, thanks, mate. And Raj, from an angel investor community, what are you seeing from Perth Angels? We've heard from crowdsourcing and from institutional investment. Is there a similar story there when it comes to angel investment?
Yeah, look, I think any structured and disciplined investor or investment process hasn't really changed pre-COVID, post-COVID. It really is going to be exactly the same as it always has been. There's probably going to be a little bit more scrutiny around cash flow, obviously, but realistically, the investment thesis and the requirements for due diligence haven't changed one little bit. What possibly is happening, and as Max was just saying, there's probably a better curation of people coming through now. There's probably some advantage for startups to look at potentially merging, rolling up together to create better entities. And I think the whole COVID environment, well, I hope at least the whole COVID environment is actually allowing us to collaborate a little better with what potentially was perceived as competitors, and actually allow us to aggregate together to go to funders like Better Labs, like Max's group, with a much more cohesive proposition. And from an angel funding point of view, it's a case of it's has to have a sound business model, it has to have a sound people model, but it really, the cash flow is always the focus.
Great, thanks. And anything from you, from your perspective, Gerrard, just to wrap up that one around what funding opportunities do currently exist, where we might be able to find capital?
Sure. I'll just talk probably from the Better Labs perspective at the moment, because I suspect it's what most people are interested in. So we're definitely open for business. So the funding is still there, a bit like Raj said, our investment thesis still remains, and we go through the same process that we would otherwise go through. In fact, we actually, just a little plug if anyone's interested, we've got an info session at 4 o'clock that we do. If people want to find out more about that, so I won't cover it off now, you can jump online then. Probably anything I'd say, just a couple of things, is from the Better Labs point of view, we are definitely about funding growth, not survival. So it's not in your interest anyway to come to us if you're in survival mode, because the valuation is not going to be right. The desperation is going to come through, and it's just you're not putting your best foot forward. So, but if you think there's growth opportunities, or you've got a very clear pathway of how you get through, then we absolutely would like to talk to you. Clearly, we have to put a COVID lens on, and that's a new part of our investment criteria. And we've already had, so we're looking like we'll probably close a deal actually in the next week or two. And we've had a couple that were very, very really, really close that we had to pause because they were so impacted by COVID. And that's hard because at the end of the day, as I said, it's people. You build a relationship through the process. The other thing I'd probably just comment on that from an investor perspective is valuations around the world, and particularly in the US, had just got ridiculously absurd. We were seeing some companies talk about 20 times revenue on a valuation, and Australian companies try and shadow that, which is entirely incorrect, by the way. And I'm hoping that what comes out of COVID is things that are much more realistic. It's already a different market in Australia anyway, but I think just, in fact, we're on a call this morning with a New York VC, and they were talking along similar lines where, perhaps this just brings a bit more sense into the venture market that got pretty hot in the US again.
Great, thanks, Dirk. And what's the date of the +8? Is that this afternoon, this evening?
So the Better Labs.
Sorry, the Better Labs. Sorry, yeah. Sorry.
Yep, yeah, 4 o'clock online. If you just go to our website, betterlabsventures.com.au. That's funny, I've just seen the RSVP come through right now. You can jump online, just RSVP, and then someone will flick you the Zoom details to log in, and we'll be going through a lot more information on what we're looking for and how to apply, and we can probably take specific questions on that then, might be better.
Great, thanks, mate. So I'm going to turn over to the crowd for questions. We've got one from Eldon. Eldon, I'll just get you to come on and ask that if you're still around. For any of those others that have questions, feel free just to either ping me directly or put it on the general Zoom chat. But Eldon, if you're still around, can I get you to unmute and ask that question?
Yeah, can you hear me?
Yeah, good.
Yep, so hi everyone. So my name is Eldon, I'm an engineer. I've got a medical device diagnostic startup, so it's rapid tests for sinus infections. It's a hardware startup. So our current worry at the moment is managing our own cash burn and cash runway, because everything is slowing down. We're stalling on prototyping because it's physical prototyping, physical testing. Our teams are broken up, split across different locations. Usability tests and focus group are non-existent at the moment. Clinical ethics and trial timelines have been lengthened as well. So it feels like we're spending similar amount of money, but not achieving similar amount of money as planned originally, but not achieving the same outcomes and milestones. So any tips on managing runways during this time?
Yeah, look, I think I'd jump in. I mean, I'm not that close to medical device funding, but I know in a place like Perth, that's hard enough at the best of times, let alone when you go into an environment like this. And in some ways, as you're talking, I think you're actually answering your own question. I mean, in reality, if things are going slower, you can't find, kind of testing environments, and it's going to be pretty hard to see someone backing what you're doing at this point in time, because the length of COVID is so unknown. As hard as it is to say, I'd be thinking around, how do you really be very, very cautious over the next kind of month or two. And at the end of the day, we're building businesses that should be sustainable and for the long term. And by delaying 1 month or 2 months, whilst it feels like you're not making the progress you want to make, and it's incredibly frustrating as an entrepreneur, in order to get to the long game, it might just be a case of just being highly cautious the next few months in terms of what you're spending. And the last thing you want to do is actually run out of cash flow and find yourself having to actually close the business, when perhaps if you just went into a bit of hibernation, you might not need to do that.
Yep, so keep it lean and try to strip down what's not necessary, I guess.
Totally, yeah. Yep.
Can I quickly jump in on that one too? Because I was just hearing an example of someone in entertainment saying a little bit similar to what Eldon was describing. And then they were just saying how there might be opportunities that otherwise wouldn't be available. So for example, site managers that are usually quite busy now would have the time to give the attention and look at their products. So maybe that's something to also think about the health system. So clinicians that are dentists that usually would, they would be very busy, but because now they're not as busy, how could you reach out to them? Like, how do you actually could take that as an opportunity for either relationship building or client discovery? What's available now that otherwise wouldn't be?
That's good. Good point.
Thanks.
Thanks, Isabel. Are there any further questions in the chat? I can't see any extra ones there.
Well, we might get one more question through. Oh, there we go. Ryan, do you want to come on online and maybe a question to Max?
Hi, Max. My name is Ryan. I'm one of the co-founders in Quacks here in the +8 cohort for 2020. We had a general question as I was speaking to Steve Carroll from RSM formerly, who's in the R&D rebate realm with RSM there. They'd worked with us in the past, and I was just wondering whether your business had looked into funding R&D based initiatives with startups where our revenue obviously isn't as high as what your minimum revenue might be looking at, and whether this was something that your business or similar businesses out there did consider funding.
Yeah, no, sure thing. Yeah, it's not what we do. It's not our core. There are lots of players in Australia that do kind of fill that market gap for R&D funding, kind of up to kind of $1 million or $2 million, depending on what your R&D claim is. For us, we're really trying to fund growth capital, and we've got a minimum kind of threshold in terms of revenue, etc. And we're trying to really fund scale businesses rather than early stage businesses. It's a different model, but I do know that there's lots of funders in that space, and it's quite well funded. So I'm sure you won't have an issue trying to go down that path.
Okay, great. Thanks for the feedback.
I actually think Steve's on the line, but I also think, Ryan, if you're chatting to him, it's probably around Radium Capital, who that's kind of their core business to forward advance your R&D grant. So
yeah, Radium. Yeah.
Thanks, guys. Cheers.
All right, I can't see any more questions in the chat, so I'm going to ask one final, just wrap up question for our panelists. We're at 12:59, so if for those are leaving us exactly 1 p.m, thank you for joining us. But just one final question for each of our panelists. Sorry. What do funders want to see during this period? Is there any final recommendations for those that are seeking capital during this time that you would impart before we leave today?
Maybe if you want to kick us off, maybe Derek?
Sure. Was a question about things people need to consider if they're looking for funding? I didn't quite catch that.
No, sorry. What do funders want to see during this period? So is there any change in approach or any?
Okay. Yeah. I mean, look, at the end of the day, I think I mentioned early on that our primary conviction comes from the founders and the relationship with them. If you've heard stuff I've talked about before, we think about this 3C model: character, competency, and chemistry. That's still the most important thing. And then if anything, as I was saying, a crisis actually gives us some clues as to how those things line up. So understanding how you're responding to COVID, and that's pretty important. We can't help but put a COVID lens on it. So if you're going to come and pitch in the next couple of months, there's no point pretending it's not there. So we'd love to hear where you think the business is going to be when it's business as usual, but we also want to understand what that generally looks like over what, from my point of view, might end up being right through the end of calendar year, that you're going to have to potentially deal with the fallout from that. So make sure you come prepared for questions around that.
Thanks, Derek. Any final wisdom from you, Erez?
Look, my lens is quite broad, that I deal with lots of different types of businesses. They could be profitable, paying dividends right before an IPO, pre-revenue, or just a gin distillery out of Margaret River. So I suppose the first thing that I would say is to focus. What type of funders are you looking for? As Derek said, what is the context that you're seeking investment? Is it for growth? Because if it's for growth, then there are various parties you can chat with that want to fund you. If it's for bridging, as Max said, there are priorities. I'd go cost cutting, looking at existing shareholders first. Then there's, other types of, severity. So I think that just focusing on what it is that you're trying to do, mapping out the scenarios to see what you need in terms of capital, and then really focusing your efforts to tailor that approach. So it's kind of a broad answer. I would probably say it depends on each of the contexts of the business. Be very clear in what you want to achieve and what you need, and then really focus your efforts.
Great, thanks, Matt. And Max?
Yeah, look, I think all founders go through difficult periods of time, and I think for us, I mean, it's a great, you know, as challenging as this time is, it's also good because you can kind of see how founders and the management team react to these situations, and you know whether they're making the hard decisions or not, or instead of waiting and hoping for the best, if they're actually acting early or not. And I think, you know, just being preemptive is really important, especially when we don't know how long this is going to go on for. So I think just managing that, and then also just obviously having different scenarios and understanding what they look like, because you're going to be asked about them, and also questioning, you know, your assumptions around, you know, what is your, you know, do you really, is your product really that sticky or not? And, you know, what does your LTV to CAC look like under these times? What's your margins going to look like during these periods of time, or even in the uptick? So I think just really questioning your assumptions and what that will look like going forward.
Great, thanks, Max. And lucky last, Raj, any final wisdom?
Yeah, look, again, reiterating what everyone said, look at funders as not survival money, but growth money. You know, our mantra, again, hasn't changed. Don't take a scattergun approach. If you're after a certain level of funding at a certain stage of your business, you've got 4 different categories of funders right here in front of you. Make sure you select the right category at the right time. And all of us know each other to some degree, and we're very happy to pass people to the right funding source if we're not the right funding source. So be selective, be focused, and certainly from the Angels' point of view, much like Derek's saying, people are important. So execution in this time is going to be key to obtaining any sort of funding.
Great. Thanks, Raj. I just want to thank all of our panelists. I'm going to give a round of applause to all of our panelists. Thank you for giving up your time. And also just another plug of that Better Lab Ventures session this afternoon. So if you are looking or aligned with, your business is aligned with that fund's objectives, then definitely check that one out this evening at 4 p.m. So thank you very much for joining us today. There's lots more stuff coming up with +8 over the next couple of weeks and coming months. So thank you very much, and we wish you all the best in this time. If there's anything we can do, Isabel, Derek, or myself, feel free to reach out at any time. Or if you need any of the contact details of the people mentioned here today, please don't hesitate to reach out either. So thank you, everybody. Sorry for going 5 minutes over, but we appreciate it and hope it's been a useful session for you all.
Hey, everyone. Take care.
Thanks.
Hi, everyone. All the best.